Did you work with VCs when you had your own business?
Yes and no. So I've had 3 businesses. My first company is the Kleine Consultant, which is now a large non-profit student-run strategy consulting organization. That is a non-profit, so there's no VC funding. My second company, I worked with Rocket Internet, so I founded a company for Rocket Internet, the Funda of the Philippines. And this was a VC-backed company. So Hotspring is, for example, one of the major VCs, and Rocket and Hotspring, that was definitely an aggressive VC. That was very tough growth targets and very aggressive expectations. We grew that company from 1 to 100 people in less than 3 years. So that was really a VC play. The third company that I did not found, but I was a CEO at True Money, which is a large fintech company, a 500-person fintech company, also backed by VC money, but more strategic. That was backed by the CP Group, which is the largest conglomerate of Thailand, a $40 billion business, and by Ant Financial, which is the largest Chinese fintech investor. And there you yet saw a very different dynamic of, because the CP Group is a family-owned business, so very hierarchical decision-making structure, and versus Rocket, which is like hardcore growth, scale. Yeah.
So in that sense, you've also worked with VCs from all over the globe.
Yeah, I have.
Do you see several differences between what's happening here and what's happening elsewhere?
Asia is different in the sense that the way you communicate is different.
Yeah.
Hey, we know each other. But in my early days with Rocket Internet, and Rocket Internet is quite infamous for this, you would have Oliver somewhere who would be yelling on the phone, like, if you don't have this amount of revenue by next week, I will close your business.
With the German accent.
With the German accent. It was really the sort of like early legendary Rocket Internet experiences. And in Asia, obviously, the way of communicating is much softer, but ultimately the VC model is the same. Yeah.
Would you recommend Dutch startups to go for outside VCs, like for VCs that operate from the UK or the US or Asia even?
It depends very much on the phase, because if you're in a very early phase, again, it's all about the person. So the likelihood of getting an angel or a venture capital firm in your own country is way higher than getting a VC in the UK or Germany, etc. Because you need to trust that person. So if I know something about a certain entrepreneur because I know something from my network, the risk is much less.
Yeah.
Plus, the question emerges if very early stage startups from, say, the UK or Germany come to us in the Netherlands, it raises a question mark on why they're not raising in their own country.
Yeah. Unless they have a warm introduction.
Unless they have a warm introduction, or they already have some more traction.
Okay, so as a startup founder, how do you look at your own startup prior to the investment?
I would actually apply the T-score, if you will, and say, well, what do we think about the team? Do we have a complete team? Do we have a team where the shareholders have significant equity? Do we have entrepreneurial experience? And score those elements of team, traction, thesis, and timing. And the more complete your view is, the easier it is to pitch this to a VC. And I would say, if you say, well, okay, looking at all of those criteria, we're too early, that's okay. Then you can go to a VC and say, I'd like to build a connection with you. I'd like to know how you see my business. And then you stay in touch for the next round. So put yourself in the shoes of the venture capitalist. Yeah.
You mentioned that you have 6 investments per year, or you aim for 6 investments per year. Is that limited due to budget or any other reasons, or what's the range, or where can you go?
That's a good question. It's actually quite difficult to do 6 investments. To do 6 investments that promise a 10x return, and to really find the entrepreneurs with the right idea sufficient proof. You're looking for a needle in the haystack. There are a lot of entrepreneurs, there are a lot of startups, and very few are VC worthy. And that doesn't mean that you don't have a good business. It just means that it's not necessarily a VC case. So I also would encourage startups. VC funding is not everything. I think there's a little bit of a myth around VC funding that's like the holy grail. It's sort of like success is raising funds. Success is not about raising funds. If you can build a $10 million business or $20 million business bootstrapped, you never raise VC, good for you, right? So it's not a measure of success. Yeah.
Okay, so what limits you? So the number of potential startups, that's the major limit for you.
I think the number of really suitable startups is a limitation. The amount of time it takes us to understand, to meet founders, to understand their business, it does take a 2 to 3 month process to really get to a deal. So there are so many of that we can do. We only have 3 partners. We have 66 million euros. I mean, we have enough money. Money is not the limitation. I don't think money is a limitation in the VC world of today because there's too much money. But finding the right, exactly the right proposition with the right team, that's the challenge. Yeah, it's more difficult than I expected.
Okay, so what amounts do you look to invest?
We look to invest anywhere between 500K to 3 million on a first ticket. So the way our fund is structured is that we want to do approximately 20 seed investments, but we will have almost 2/3 of our fund reserved for follow-on investments. So what we do in the first 3 years is try to make those 20 investments and then follow through and put additional capital into the companies that are winning.
And are you then usually, in the seed rounds, are you usually the lead investor also in the follow-up rounds, or then do you participate in other people's lead rounds?
Yeah, good question. In the seed round, we are always in the lead. In a follow-up,
you set the terms.
Yeah, exactly.
All right.
And now, before the previous fund that we had was only 12 million, so now 66, and now we will also likely lead in follow-on rounds or partners. So we have a network of very prominent European VCs, Point9, Axel, these kind of prominent UK, German, or even US investors that we'd like to co-invest with. Because when you get to the stage that you want to scale European-wide, you also want to look in a very strategic way. What investors have a local network, what investors can help me to grow. Yeah. Because investment is always about more than money. It's
so as
really
a startup, you find out, okay, so what other countries do I want to go to? What makes sense and what investor can help me get there? But how do I find out what your network is?
You ask, that's a good starting point. But what kind of businesses have you funded, right? So for example, P Capital is really, I think in the Netherlands, the most well-known investor for SaaS and marketplace models, right? That's what we do, and we have a lot of proof that we can help scale those kind of business models. We understand those business models. And we've made a couple of companies big across Europe. So we're good for that. But we might not be the best, a consumer space or hardware investor.
Yeah.
Is there in the VC world a doing the right thing kind of benefit in sense of green investments or social investments? Is there benefit, or is it still pure return on investment?
It depends what funds you work with. So there are now a couple of really more social impact investing funds. There's for impact VC, there's social impact ventures, and they really have institutionalized a way of measuring and evaluating based on impact, not just on ROI. I think P Capital, we don't have that institutionalized. It's something that we might look for. What we primarily look for in the impact that we want to have is really help support companies with talent to the next level, right? That's the impact that we want to have. But we haven't institutionalized, say, a set of social goals the way that a social impact investment has. But I think that's a new trend that investors also say, okay, well, what ROI can we have beyond the financial return? The financial return is not so exciting. What kind of impact can you have in the world? Yeah.
You did join Fundright.
Of course.
So the initiative to fund, correct me if I'm wrong, in a couple of years you'll only invest in companies of which at least an X amount of shares is owned by a diverse group of founders?
Yeah, diversity is important to us. So for example, all of our funding documentation has a diversity statement, sort of like a commitment of the companies that we fund to pursue diversity in their teams. And P Capital itself made a leap towards that by having a 50-50 diverse team. So half of our founders half of the partners are female. That's first. I'm gay, that helps for diversity. We have somebody with a Chinese background, so kind of diverse. Yeah. But no, we want to be diverse ourselves. We believe in diversity not only of gender and origin, but also very much in diversity of opinions, right? Yeah. Because we have very different characters in the teams, and I really like that because you need original thought, right? Yeah. And the same, you need that also in the companies. Yeah. You don't want to have a monolithic culture. You want diversity, and so that's something that we discuss with our teams and encourage and also put in our documentation. Yeah.
But let's say you have a founding three or three guys.
Yeah.
Just a random example, because it happens a lot.
It happens all the time. It happens all the time.
So, do you automatically say no, or
no?
How do you process that?
No, we don't automatically say no. What we will do is say we'll put this hiring commitment, and we actively as a VC help hiring. So that's something that we do. We often we're very involved in senior level, C-level hiring, and that's where we will try to bring in the diversity. But again, not because there needs to be this token woman or a token ethnic person in the team, but because we really do believe that diversity is very beneficial for the quality of thought and the way we the culture, company culture.
All right. So next to the valuation that you provide with the term sheet and the amount of money that you're willing to invest, what other, well, not say rules, but what other things do you want to agree on? Like, do you want to have a say in who gets hired on a senior position, and is that already in a seed stage or also only in a Series A stage? What kind of other arrangements do you make with the founders? What do you put in the contract?
Yeah. There will be a list of reserved matters. When you get a VC on board, there will be a list of reserved matters of things that a VC needs to basically say yes to. Most of these are only things that sort of affect the capital structure, but also long-term contracts. And for example, in our case, salaries above 60,000 euros, we need to approve, right? But we've never said no, because ultimately, a CEO, a founder, an entrepreneurial team, they need to make their own decisions. But we like to give our input, right, and then ensure, because the company is only as good as the team. Yeah. Right. So we like to contribute.
Do you even have a say? Do you take a board seat with voting rights? How does that work in the, let's say, seed and follow-up investment?
Yeah. Well, in the case of hiring, we might even sit on the interviews and do interviews ourselves alongside the founders. We don't like supervisory boards so much. We think
why not?
Well, supervisory boards rather limit startups in an early phase, so we like an advisory board, but not a supervisory board. A supervisory board is more about control and compliance, and that's not what we need. We need the founder to be, in the driving seat, and the advisory board will sit in the back seat and give advice to the best of our ability.
Yeah. All right. Yeah. That also both for the seed stage and the follow-up investments.
Yes, and often we put in the contract that should there be a supervisory board, we want a seat on the supervisory board, but we will not ourselves initiate creating a supervisory board until there's a requirement to do so.
You mentioned you helping startups and founders to the next level, and you mentioned financial, obviously, and also hiring. What else do you mean by taking the business to the next level? What does that entail?
Yeah, good question. I think one of the starting points for us is often the data infrastructure, to ensure that you have the right data, you mine the right data insights from within your company. Often what we see is companies that have a good idea, they have a good team, and it's kind of a mess, right? You've been very opportunistic, you've been hustling, you've been, playing as it lays, basically. And so one of the first things that we often do is sort of try to bring structure and data and organization, as a result of which you have control. So now you know what is happening in my business, what are the key drivers, what are the knobs I can turn to turn up the volume. Then you have control. We ensure that we have full control, full transparency, that we have the right team, right? And then you have something that you can put your capital behind, and then you can speed it up, right? And the questions that we work on with different companies are different. Some companies we very much help on finding product market fit. And you want to have critical conversations with your investor. You want your investor to push back on certain decisions, right? Yeah. Because two thoughts is more than one. So I think you should expect advice, network, hiring as the basis. But I think you should also really evaluate potential investors on the quality of the conversation that you have.
So let's say that I want to work with P Capital. Do I decide what partner I get in touch with? Yes, you can. And we have 3 rather different partners. Johan is a very strong commercial guy. So if you're, if sales is very important in your business, definitely connect with him. Stefan is the brain. He's super strong, one of the best people I know on anything analytics, legal, compliance, but really extremely numbers driven. And I think the most entrepreneurial. I've built companies and scaled companies from 1 to 500 people. So my expertise is really in how do you build teams, how do you scale up, how do you organize and create and design your processes. How do you go from A to B?
How do you value company? And when the valuation comes from your side and from a founder, obviously you have to find a middle way. But how do you get the marriage right?
Yeah, good question. Valuation in the case of venture capital is more art than science. In the case of private equity, my first 3.5 years of my career, I worked for Hall Investments, and we were, buying companies which had tens or hundreds of millions of revenue. So then it's quite easy, and you do a traditional DCF kind of valuation on the expected forecasted cash flows. The problem with startups is that you could be dead in a year, or you could be in the millions, and you really there's no way of saying. So venture capitalists approach this from different sides. One is that you use very simple benchmark multiples. A simple benchmark in SaaS, for example, is between 60 to 150 times monthly recurring revenue, or 4 times ARR, for example, anywhere between 4 to 6 times ARR as an initial valuation. But VCs might also look at it from a return perspective. Say I invest in your company, I expect that your company will exit anywhere, let's say 50 million in 5 years, and that's obviously just a wild guess. What should I pay today to make my required return on investment? Yeah. That's how you can look at it.